Okay, introduction managerial accounting. Let's go over the midterm exam review. For the midterm exam review, again, you're going to have enough time to do it is given. Once you start, you have to finish it. You're going to have 20 multiple choice questions and 8 other questions. You're going to have one question from chapter 2, two questions from chapter 3, two questions from chapter 4, two questions from chapter 5, two questions from chapter 7. That's what I'm planning. I should have give you more questions, but I believe for this level, for this course, that will be more than enough. On the midterm, I'm going to give you more questions, so you can practice more managerial accounting. Sorry, on the final exam, I'm going to give you more. Now for the midterm, I'm going to limit only for 29 questions. So hold on a second. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 questions, which are assignment questions, and 20 multiple choice questions. That's the structure of your exam. Now let's go one after another. What you're going to see from chapter 2, or definitely you're going to see a preparation schedule of costs of goods manufactured. Now, that is important for you can understand from where the cost of goods sold is coming from the manufacturing company. Now, when you see the information, what I want you to do is, and that's not the information that you're going to see. This is taken from question 2 from the set of questions which is on Blackboard. That's not the exact information that you're going to see on your screen when you open the exam, but it might be something similar. The good thing is with you is you don't have to worry. Everything will the options that you're going to have for the names is going to pop up, so you have to scroll down and drop down the available options, choose the right options, click the proper name and move on. That's what you have to do. Now, in this case, let's go and think about this. Obviously, once you see information like this, once you have the raw material, when you have the working process, when it dealing with the products, you have to understand that this is manufacturing company. Manufacturing company, what's interesting with the manufacturing company? Manufacturing company has 3 inventory accounts, which are raw materials, work in process, finished goods. Now the question is, what we need all those 3 accounts for different purposes, obviously, but in the process of the company for obviously in order to produce a product, we need the raw material. And once we start using the raw material, when it's in the stage of production, it's going to be in the working process because neither going to be final product, neither is going to be raw material, something in the middle, that's called working process. It's going to stay in that specific account for accounting purposes. Then eventually when it's prepared, product is ready to be sold, it's going to move to the finished goods. That's why it's called finished goods. And once it's sold, become a cost of goods sold. Why? Because cost of goods sold, because we want to match the revenue with the cost of goods sold to see what's our in the traditional income statement gross margin, or basically what we're generating from the selling of our finished goods only. Now, for that reason, we need that cost of goods sold. Now, we cannot get the cost of goods sold until we get something else, which is called cost of goods manufactured. Now, the cost of goods manufactured is the cost that will be accumulated in the working process. And once we say the product is ready to move to the next stage or to be available for the client for sale, we're going to call it finished product, going to move it from the working process into the finished goods, and that product is ready to be sold. So that's why we need that this cost of goods manufactured, which eventually cost of goods manufactured is going to become a cost of goods sold. Or to some extent, depends what kind of method we're using. We may use first in, first out, or we can use the weighted average. So it's not necessarily cost of goods manufactured will become a cost of goods sold. But anyway, that's the idea. Okay, so in the question, you're going to have to prepare only schedule for the cost of goods manufactured. I'm not going to ask you for the cost of goods sold. If you want to do the cost of goods sold, you can do it by yourself after you finish the cost of goods manufactured. What we know about those accounts, those are balance sheet accounts, which normal balance is debit. They have the beginning balance and ending balance, which a normal balance again is debit. If that's the case, how we calculating the part of the credit and debit and ending balance and the beginning balance plus the debit is always equal to credit and the ending balance. So everything that comes on the debit side increase the amount on this account. Everything that's going out on the credit side reduces the amount of this account. Ending balance always going to be beginning balance plus what's coming in minus what's going out. That stays. If there's anything that stays as ending balance. So in that case, how we're gonna calculate the direct material use? Direct material use is gonna be beginning balance plus whatever we purchase minus whatever we have. It's gonna give us how much we used. Again, why do we need how much we use? Because the direct material is per cost of the product. Product has three costs: direct material, direct labor, manufacturing overhead. Once we get all these costs, that's gonna give a cost of goods manufactured. So first thing that we have to find is direct material that we used. So let's go. Direct material that we use. How are we going to get it? First, we're going to get beginning balance of the raw material, which in our case, in this case, let's put some numbers a little bit later. Let's keep going with this now. Then we're going to have, once we have the beginning balance, then we're going to add the purchases. Once we add the purchases, we're going to have direct material available. What we're going to do with those material, we're going to transfer it further into production. That will be raw material available. Once we have available, what we have to do, we have to deduct less ending balance of the raw material. And that's going to give us the direct material used. Okay, I get the direct material used. But that's only one cost of my product. I need the other two costs, direct labor, the manufacturing overhead. Now, for the working process, since now we have to find the cost of goods manufactured, which is on the credit side, what we have to do, we have to same approach, beginning balance plus all the elements of the product minus the ending balance going to give us cost of goods manufactured. Okay, let's start. Now we have direct material used. What else we need? We need the other two. In order to find the other two, let's go with the single here calculation for the that will be for, let's start with the raw in working process. Let's start with the beginning balance in the working process. And we're gonna get the beginning balance, then we're gonna add, we already have the direct material. We're gonna come to direct material, we're gonna add direct material, we're gonna add direct labor. Then we're gonna add manufacturing overhead. Once we have all those three costs, we're gonna have the product cost. Those three is gonna give us our product cost. Once we combine them with the beginning working process, we're gonna have the total cost available to transfer. Probably I'll need those one, or probably I'm gonna use everything here. That will be total. First, we're gonna get total product cost. That will be for the period only, and then we're gonna get the total cost available to transfer. And once we get the total cost to transfer, then we're going to deduct less ending balance of the working process account, and then we're going to get cost of goods manufactured. And that's how we prepare the schedule. That the cost of goods manufactured. Now, if you want to add and find out what's the cost of goods sold, we have to add the same calculation. Beginning balance plus what's coming in minus the ending balance is going to give you what's going out for the finished goods. So we're going to start with the beginning balance of the finished goods, and then we're going to have we have to add cost of goods manufactured. Once we add the cost of goods manufactured, we're going to have finished goods available for sale. Finished goods available for sale, and once we deduct the ending balance of the finished goods, we're going to get cost of goods sold. Again, cost of goods sold is not required. You don't have to do it. I'm just showing it here for the purpose of this exercise. So once you have this information, the only thing that you have to start plugging is the information from the exam that we're going to be given to you. Now, one way is to put everything on the T accounts. If it's easy for you, once you get the information, you can put it on the T account and then apply it to this chart. Either try to drop down menu and apply the numbers. But the easiest one will be to visualize it everything. So let's go with the beginning balance of the raw material. That will be 66,000 here. And then we're going to purchase raw material for 528,123. Now that's great. Ending balance for the raw material will be 78,123. Then I'm going to apply simply the formula which is below the account, which is equal to the beginning balance plus the debit minus the ending balance. It's going to give me the direct material used. Now that direct material used is going to move here. And then I have to see how much is direct labor manufacturing overhead. Direct labor in our case is 258,123. And manufacturing overhead applied is 456,123. So I have all those three. The next thing that I need is beginning balance for the working process, 228,123, and ending balance of the working process. And once I have those two numbers, I can easily calculate my cost of good manufacture will be a beginning balance plus all the debits minus the ending balance is going to give me cost of good manufactured. Now, cost of good manufactured is going to flow to the finished goods. Now, since with this question only asks for cost of good manufacture, we can easily plug some numbers. Let's say 250,000 beginning balance, ending balance, let's leave it at 45,000. Let's sell everything possible, get some cash for this company. Beginning balance plus the what we manufacture minus what's left, which we haven't sold yet, it's going to give a cost of goods sold. And that's how we're getting the cost of goods sold. That's how simple it is. Now let's put this information from the T accounts into this calculation chart, which again coming from the T accounts. So for the raw material, what we're going to do? We're going to get raw material beginning balance, which is 66,000. We're going to add the purchases to 528. Once we get those two, we're going to get raw material available. For what will be available? Available for use. And once we deduct the ending balance, we're going to get direct material used. This one minus that one is going to give us direct material used. So either you can keep going with the calculation, you can just get the information from the T account. Once you do that, then you start going with the, actually, let's leave it here. Let's leave this one here. Once you have those one, then we're going to end up the beginning balance of the working process, which is this amount. Then we're going to start adding the direct material. Then we're going to adding the direct labor. Then we're going to add the manufacturing overhead. All those three is going to give me my Total product cost for the period. I don't want it here. I'm gonna move it right here. And once I have this, then I can calculate that's not the total. Obviously, I have to move the formula up to catch the beginning. That's gonna give me the total cost to transfer further. This is my cost that's sitting in the working process, which is available to transfer further. Once I deduct the ending balance, which is equal to 264, it's going to give me the cost of goods manufactured. It's nothing challenging in this question. I don't see anything challenging. I'm not sure if you see anything challenging, but I personally don't see anything challenging here. Should be very straightforward, nothing scary, nothing that you cannot do. And if you have to do the finished goods, then we're going to get the beginning balance of the finished goods. We're going to add the cost of goods manufactured. That's going to give us how much we have available for sale. Once we're deducting the ending balance here, we're going to get cost of goods sold, which we already know it. We just prepare it now for the statement. Remember, this is the statement. It has to have a name. Starts with the company name, then start with the name of the statement, then for the period for which the statement is prepared. And that's how it is, the formal preparation for this type of report. Questions on this type of questions? Do you find anything difficult here? I also don't see anything difficult, but again, you can always surprise me. That's what usually students do. They always tend to surprise me. Make from something easy something difficult. I even put one day, based on my experience, teaching experience, I come up with this phrase which I posted on my LinkedIn, which phrase technically says, everything is possible until you make it impossible. So technically you can do, you technically, you potentially, you have the potential to do everything until you take your chances and make it impossible. So let's go here. The game is 0-0, so nothing interesting. Don't worry. They hitting that ball 4-0-0. Let's go for the next type of question, which coming from chapter 3, which is related to high and low method. Now, for the high and low method, what I want you to understand is that's a simple way to become ChatGPT. In terms of, we're going to use the data, we're going to analyze the data, we're going to use some mathematical formulas, and we're going to start predicting the future based on what the users want from us. For example, the manager is going to come and say, hey, this is the information that I'm giving you. Based on this information, I'm using this activity, and once every time my cost is directly related to this particular activity. Now, every time when I'm using this activity, cost is changing. I notice this. Now the total cost increasing. Can you predict the cost? Can you tell me, based on the information that I'm giving you, how much will be my cost if I make 10 shipments? And what the ChatGPT is going to do is going to start calculating, make a calculation. It's going to tell you, okay, based on the numbers that you're sending me, if you make 10 shipments, your cost will be that much. Now the question is, can we do this and without using ChatGPT? That's the only question. Um, I believe I told the other people, or maybe I didn't. We're getting to the point that because of the increase interest to this artificial intelligence, uh, we as a human start to depend too much on the artificial intelligence. It's not wrong, or maybe it's not wrong, I don't know. But the thing is, you're not making choices. You're waiting somebody to make a choice for you, which is, I don't think it's a good thing, but again, that's my opinion. And since this course is not about should I make a choice based on ChatGPT projection or should I always talk to ChatGPT before I decide to go outside, where to go and who to meet and what to tell. Let's focus on the intermanagerial accounting and how we can predict. Yes, that's another thing. Area, yeah, that's another thing. But well, I was reading one article a few days ago, which articles saying that the young generation, which now is in the high school, which learning about the jobs and what to do and what not to do, they will be working jobs which are not created yet. I don't know if that's going to happen. We have to wait and see. It's going to be interesting. To some extent, I I will strongly suggest you to think about something. There during the life of humanity, there was always a revolution. Stages of revolution means that technology advance or all the environment shift in one direction to another direction. There's a quiet years and then something dramatically happen and then again quiet years and then something dramatically happen. That there's some interesting event if you look at the past, and one will be that industrial revolution, which started in Britain. Um, so so that industrial revolution, people who were living on that time, probably they didn't realize what time they're living. Most likely right now we end another revolution, which is technology revolution, which probably is going to change our life completely with this artificial intelligence. So I would strongly suggest you to step back a little bit and think about it because we and you are part of this revolution ages, which probably is going to change the life of the humanity for the next few decades. But you're the one who actually living on the time of the changes. Do you understand this? Few years later, those changes will become, and the people they just gonna get what they get. But right now, we are the one that experience those changes. So enjoy this time. There will be not many generations that can one day say, you know what, I was actually living when this thing actually happened. So to some extent, consider yourself lucky. Let's go now with the high-low method and see how we can predict the future. One thing that I want you to understand is in this method, again, is simple method. So what we have to do, we have to identify the highest point of usage. Cost is irrelevant in this case. Cost is irrelevant. We're not hanging out on the cost. We're staying with the higher level of usage and the lower level of usage. So let's go with the high. Which one is the highest level of usage? Now, again, you're going to have a lockdown screen, but if you have to do using the Excel, try to use the formulas, brush your skills on the Excel, and get the maximum of all these values. And it's very simple. Boom, it's going to give you that way you're not going to make a mistake. And then get the low point. Low point will be equal to the minimum of all those cells. And boom, and you're done. Right? Now you can easily check, is that actually is 8 is the highest point? We're checking, yes, the highest is higher point. Is the 2 actually the lowest point? Yes, 2 is the lowest point. Then what we're gonna, next thing that we're gonna do is we're gonna get the total cost of this level of activity. Not the highest total cost, not the lowest total cost, the total cost of this level of activity. This is common mistake. Usually, that's why throwing off the students who have questions or have doubts about this method. When they see information like this, they come and say, on the time when we're doing this on paper, they come and say, teacher, there's a mistake. And I say, why is the mistake? Well, usage is here, but the highest cost is here. There's a mistake in the question. No, there's no mistake in the question. You're forgetting that cost, highest cost or low cost is irrelevant. You're just getting the cost which is on the highest level, which in this case, simply what you can do is you can easily get this vertical lookup, which is going to be from the formulas. If you want to go that direction, go to the formulas, go to the vertical lookup and get the value which is associated with number 8 from this table, which the column that is related to the cost is column 3, and the rest is false, and you're getting your number, 3,600. You don't have to worry about it. You don't have to think, am I making mistakes, and anything like that. If the 8 is June and July, then that will be tricky one. You have to, in that case, you may get the average. If that's the question, if that's the count, but in this type of question here for the academical purposes, that's not going to happen. But if this happen in reality, if you want on the reality, then use some logical. The logical most likely will be get the average, right? Yes. If that happen, yes. If that happen in reality, use that one, that method. In that case, you consider both level. Because on the average, high on the average is 8 plus 8 divided by 2 is 8. And then the cost, total cost in one, total cost in the other divided by 2, you get the average, work with that number. So let's go with the low level, but for the academical purposes on this level, you're not going to see anything like this. That will be too much challenge. I know this question, I have 2 months with 4, but that's just a coincidence. Let's get the number 2, and let's get this vertical lookup for this level of activity. And that will be, we're going to look for this value in this table tray, and we're going to get, once we see 2, going to get the information from column 3, otherwise it's false. And we're getting that number as well. So I have the value at the highest point, and I have the value at the lowest point. What do I need those one for? Obviously, I need it for high-low method, obviously. Now, but how this going to help me to solve my problem? Because technically, what I'm trying to do is I'm trying to find out how I come up with this total cost. How when I use only 2 shipments, my cost is 1,500, and how when I use only 8 shipments, my cost is $3,600. Why is that? I'm trying to understand my cost. Do you understand this? We're trying just simply to understand the cost. What do we know the cost? I know that the total cost, which is here, total shipping expense, is equal, based on how the cost behave, I'm always going to have a variable cost and I'm going to have a fixed cost. So I have those two costs in anything. Now what I'm trying to do is to find out, can I calculate the variable cost? Can I calculate the fixed cost? What do I know the variable cost? Variable cost per unit doesn't change, and fixed cost in total doesn't change. And fixed costs in total, no change. That's what I know. So what I'm trying to get to the point which I'm getting to the cost, which doesn't change. Also, what I know is the variable cost is equal to the number of units that I drive the cost time the cost per unit, which is my cost which doesn't change. So from this high-low method, I'm using it for only one purposes. Is there any way I to get variable cost? So once we get the differences, once I get the difference, that will be 8 minus 2, and here will be, this one will be 3,600 minus 1,500. I'm gonna get this some numbers. Now, once I get those numbers, that will be usage, that will be the total cost. At this point, I can come up with the variable cost per unit. I know it's very subjective, but that's why we're using simple method. We using this one. So how can I get? I'm trying to get cost per usage in this one per shipment. That trying to cost per shipment. So what I'm gonna do, I'm gonna get the dollar amount divided by the number of shipments, and that's gonna give me variable cost per unit. Again, it's very subjective, but that's the simplicity and that's the beauty of this simple method. So now I know something. What I know, variable cost per unit. And that variable cost per unit is 350. The next objective is to find the total fixed cost. Total fixed cost, how can we find it? Well, we have 2 points. I have the highest points and I have lowest points. In both points, I know the total cost. On both points, I know that total cost is equal to the bracket number of the units that I'm using it time variable cost per unit, which I already know, plus the fixed cost, which I don't know. At either point, which point do you want me to use? Let's not use both. Let's stick with one point. High or low? Okay, let's go with the high. Yesterday we used low. Today let's stay with the high. On the high point, what do I know on the high point? I know the high point that this is my available information. I know that usage is 8 and total cost is $3,600. I know that. So substituting in the previous formula, since I already know the variable cost is 350, substituting this formula should be straightforward. Let's copy this so you can see it. So substituting the previous formula will be total cost I already know it's $3,600 should be equal to bracket number of the usage. I know I'm using it 8 times. 8 times time variable cost, which I know is 350. Close the bracket plus the fixed cost, which I don't know. Now, can I express the fixed cost? Well, who's gonna stop me, right? So the fixed cost is gonna be equal to, or I can go with this one, 3,600 should be equal to 8 and 350. 350 and 350, that's 700. And that's 2 times. And then I need it 4 more time. 700, that should be 2,800, correct? Plus the fixed cost. Am I right or no? So in that case, the fixed cost now will be very simple to calculate. Will be 3,600 minus 2,800. It's gonna be 3,600 minus. No, I should go. Let's go to the next one. 3,600 minus 2,800, and it's gonna give me $800 is my fixed cost. Now I know my fixed cost. So at this point, I know everything that I need to know. I know variable costs, which doesn't change. Fixed costs in total, which doesn't change. Where you gonna apply them? I'm gonna apply them in my formula for the total cost. And I'm gonna substitute the numbers. So I have now universal formula, which universal formula is gonna be bracket number of the units time variable cost per unit, which I already know, which will be 350, plus the fixed cost, which I already know is $800. That's my formula. Now, like one chat GPT, what I'm gonna ask you, tell me how many shipments you have so I can predict how much will be the total cost. That's what ChatGPT doing. Obviously, using a way more information, a way more formulas, a way more complex formulas, but that's a general idea. Again, what we have a past event, we're finding the pattern, we're using simple method, we come up with the idea that the cost behave as a variable in fixed cost, trying to finding the variable cost, eliminating the fixed cost. We know those as stable costs, we can predict now something. It's always like that, people. Unfortunately, the way I'm seeing it is we're gonna forget how we predict the cost. And we're just gonna rely on something to predict the cost for us, but that's our future. Let's keep going. Next one. Next question that you're gonna see is, I want you to convert traditional income statement into contribution format income statement. So you're gonna have information about company which have a sales, cost of goods sold. Once you see cost of goods sold, you have to easily identify, okay, this is traditional income statement. What's the next after cost of goods sold? Gross margin. What follows the next? Operating expenses, which is utility expenses, sales administrative expenses, salary expenses. You can have any other expenses. So you get the total expenses and you have operating income. Now, what you have to do is this information, which is presented in this type of format, you have to convert it into the contribution margin. Contribution margin income statement. How can you do that? Well, you have to convert the cost and you have to express cost only in two ways, as a variable and fixed, nothing else. So what you're gonna do is, I'm gonna drop off a little bit here. What you're gonna do is you're gonna pull out this cost of goods sold. You're gonna pull out this one. You're gonna pull out this cost, and you're gonna pull out this cost. That's the cost that you have to play, as you can see. The total cost is 430. Sales are 500, 430, 70. Simple. Now, what kind of middle calculation here is going to have, it doesn't matter. But the total is, the fact is that we have that much cost and that much sales. And we end up with $70,000 more sales than the cost. Now, what we have to do, we pull out once we know those costs, which are cost of goods sold, utility expenses, sales administrative expenses, salary expenses. We're going to have the information how the costs behave. Again, they behave only two ways, as a variable and fixed. Now, cost of goods sold, always variable cost. Why? Because it's directly related to the production. So, and sales. So the sales drive that cost of goods sold. More you're selling, more your cost coming. Less you're selling, less cost of goods sold. We already saw that through the manufacturing process, cost of goods manufactured. And the cost of good manufacture, you already saw that the only portion of the fixed cost that you may have is the in manufacturing overhead. But for purpose of this question, we're going to eliminate that and we're going to assume that all the costs of goods sold are variable cost. And then we start utility expenses. On utility expenses, the question may say, I don't know what the question is. I'm not going to copy and paste the question now because that killed the beauty of the exam. Utility expenses, it may say the 20%, and let's change this one so it can become interesting. The 35% of those utility expenses are variable cost. The rest is fixed cost. From the sales administrative expenses, 50,000 are variable costs. The remaining are fixed cost. And on the salary expenses, 1/3 of this cost is variable cost. The remaining is fixed cost. It doesn't even say the remaining is fixed cost. You may say the variable costs are cost of goods sold at 100%. 35% of the utility expenses are variable costs. 50,000 from the salary administrative expenses are variable costs, and 1/3 of sales administrative expenses is variable costs. So that's different kind of usage of the information. You can see different type of information for you to come up with the idea how much is the variable cost, how much is the fixed cost. So once we know that, what we have to do, we have to prepare the income statement for contribution margin income statement. What's interesting with that statement? Sales is going to stay the same. Since we're pulling this cost and changing it only to the variable and fixed, cost is going to stay the same. So if the cost stays the same, operating income is going to stay the same. You can easily predict this one. Why? Because I'm not changing the operating income. My operating income is going to be exactly the same. I may want another income, but it's not going to happen because my costs are exactly 430. Now, how they behave, it doesn't matter. It's just presentation for the different format. So let's move this one to different cover. So what I have to do now, after sales, to make it contribution margin, we're going to do the variable cost here, and then we're going to have a contribution margin. And now we're going to start variable cost. Variable cost, let's go cost of goods sold. Is my variable cost. Actually, let's do this, variable cost. And the first one is let's put some space, cost of goods sold. And cost of goods sold is 200,000. Next variable cost is utility expenses, with space equal to this one. Oops, not like that. Let's go with this one, utility expenses. Now let's do some formatting for those 1, 2, 3. And boom, we have utility expenses. Now utility expenses, we already know 35% of the utility expenses variable cost. So that means 50,000 times 35% will be variable cost. Then the next one will be sales administrative expenses. Sales administrative expenses, 50,000 of variable cost, boom, 50,000 variable cost. Then I have the last one, which is the salary expenses. On the salary expenses, I'm gonna have 60 times bracket 1 divided by 3, and 20,000. So my total variable cost, I need more lines here. Let's go with the total variable cost. My total variable cost in this case is sum of all those three, and I'm gonna move it right here. That's it. And I'm done with my first calculation for the variable cost. Then I'm gonna calculate the fixed cost. And for the fixed cost, what I know for the fixed cost, I'm gonna have, okay, those are the same. For the fixed cost, I'm gonna have the same. First, I'm gonna have this utility expenses, then I'm gonna have the sales administrative expenses, and then I'm gonna have the salary expenses. And I'm gonna start. My utility expenses are 50,000 minus the variable cost. Boom. Then my salary expenses will be 120 minus 50, 70. My salary expenses will be 60 minus 20, that's 40,000. Total fixed cost. Fixed cost is gonna be, once we calculate this total, 402,500. Now, the only thing that I forgot is what I'm missing on this statement. Everything looks fine. I'm missing my contribution margin. You don't miss it on the exam. You shouldn't be missing it because you have the drop-down menu. I don't have it, but you have it. So basically, once you take the variable cost, you can calculate the contribution margin, which contribution margin is 500 minus the 287,500. And once you get the total fixed cost, you can easily calculating that this one minus this one should give you the 70,000. If you get number here different than 70,000, you have to go back. Something is wrong with your calculation. Again, you cannot change the sales and you cannot change the operating income. This already happened. You just changing the classification of the cost, but that's the same cost, which behave only as a variable and fixed. That's all. Now, the next thing that you're going to see, next type of question that you're going to see is the break-even. Now, the break-even, what I want you to do is I want you to go to, let me share my screen. Which is this one. On the midterm exam questions, not the first one. Second one we already covered, that's for the cost of goods manufactured. This question is absolutely not for you. Question 3, don't even look at it. We're not there yet. So don't worry about question 3. This is the question that I was talking about, question number 4, which give you the information. Now, what we have to do is when you see something like this, information about the company, which have sales, variable expenses, contribution margin, fixed expenses, and net operating income. Obviously, that's contribution format income statement. Now, what's interesting here? Again, the costs are presented by a variable and fixed. What do we know about variable and fixed? Variable per unit stays the same, fixed in total stays the same. So within the relevant range, then checking what's the relevant range. Relevant range is between 500 and 1,500 units. So within that range, fixed expenses always and always going to be $6,000. Now, what you have to find out, what is the variable cost per unit? Because we already know fixed cost in total doesn't change, variable cost per unit doesn't change. And once we get the variable cost per unit. We can find out what's the sales price per unit. We can calculate the contribution margin per unit. The other question that we have to ask ourselves is, this data is based on the certain volume. What's the volume? Volume is 1,000 units. So the sales are 20,000 only and only because we're selling 1,000 units. Variable expenses are variable expenses at $12,000 and only because we're selling 1,000 units. And contribution margin is 8,000 and only because we sold 1,000 units. So once we have that, then we can answer all those questions. I'm going to copy those questions and I'm going to move to the Excel spreadsheet and we can start answering all those questions. Julia, I wish I can tell you the score, but you're gonna hate me, so maybe I should skip it for now.
It's okay, you can tell me.
I don't want to.
No,
I don't want you to hate me.
I won't hate you, I promise. Is it 1-0?
The goalie made a mistake.
What?
Yes,
No.
the goalie made a. I mean, it's like a kind of team mistake.
Oh no.
Yes, I'm sorry. And they just substitute Son. So Son is out too.
They took him out? Oh my
They
goodness.
took him out. Yes. So
Okay.
now it's kind of tricky, but we'll see what they're gonna do. You
Yeah, we'll
never know.
see.
You never know. Let's hope. Let's hope for the best, right?
Mm-hmm.
Again, this situation happened only and only we selling ourselves and production is $1,000, 1,000 units. So at this point, what we have to do, few things. Once you see something like this, get the information and start some calculation. First thing, what we can get. We can get common format income statement. What is common format income statement? Percentage. So we already know the sales divided by sales is 1. 1 is equal to 100%. Okay, that's great. So now we start expressing everything as a percentage of sales. Variable cost out of sales. And once we put the percentage, that's 60%. So what's left for the contribution margin to be 40? So how are you going to get it? Is it 8 divided by 20 or 100 minus 60? It doesn't matter. Always going to be the same. So we get that one, 40%. What else we can get? Sales per unit, right? All this information, but on the unit level. Let me copy this one. I'm going to flip it here. And I'm going to start working now to get per 1 unit. And per unit simply is going to be this amount divided by 1,000. Then I'm going to have the variable cost. Again, will be this amount divided by 1,000. Fixed cost, we're going to stay fixed cost because it doesn't change. Again, fixed cost in total stays the same. But now what I have is I have this information which can help me a lot. What else I can express? I can get the percentages. Sales, again, sales divided by sales is 1. That will be 100%. And then expressing everything as a percentage of sales. Surprisingly, nothing's going to change. Variable cost percentage always going to be 60%. The only thing that, the only way I can change that one is if I change the cost structure here. If I change either sales price, either variable cost. As long as I'm keeping the sales and variable cost, both going to increase in the same proportion. So the percentage never going to change. Why? Because the only thing that drives them is exactly the same thing. The only thing that drives them is the number of units. And I get my 40% here. Let me get the same formatting here, 40%. Okay, once I know this, everything from now on is easy. What's the contribution margin per unit? We already calculated contribution margin per unit is $8. What the contribution margin ratio? Now you can get it from the total, or you can get it from the unit. It doesn't matter. It's always going to be the same. Next one. What's the variable expense ratio? Obviously, 100 minus the contribution margin ratio is going to give you. What if the sales increase to currently 1,000? What's going to happen if I'm selling one extra unit? Well, the contribution margin of that extra unit is going to flow to the income. What would be the increase of the operating income? $8, which is the exactly contribution margin of the additional unit that we're selling. That's all. If the sales decline to $900, what will be the net operating income? Now, for here, what we need few things. Again, this is per unit. This is if we're selling 1,000 units. What do we know? Sales price not gonna change. Variable cost not gonna change. So what else not gonna change? Contribution margin. So do I have to prepare the entire statement? No. What do I know? If I'm selling 900 units, so 900 units times $8 per unit is gonna give me the contribution margin. Once I deduct the fixed cost, it's gonna give me the operating income. So my contribution margin, instead of 8,000, is gonna drop down with 100 times $8, which is with 800. It's gonna become 7,200 minus 6,000. It's gonna give me 1,200, which will be my new operating income if I'm selling only 900 units. Or how much my income dropped down? With $800. Why $800? Because those 100 units that I lost, they gave me total of 800 contribution margin. What's gonna happen if the selling price now increase with $2 and the sales volume decrease by 100? Now we're changing here the cost structure now. So if we do this, let's see what's gonna happen now. If we do this, we're changing everything. For that reason, I'm gonna copy this and I'm gonna paste it here. So what's happened? We're changing the sales price. Sales price become 22. Contribution margin, as you can see, jumped to $10. And since I'm selling a decrease with 100 units, so instead of selling 1,000, I'm selling 900 units. So that will be 900 times 22. And the next will be 900 times 12, which is going to stay the same. Oh, there's here that. All right. That's 22. Let's keep it simple, 12. And now I have the number. So what's happened now? My operating income increased with $1,000. Why? Because I increased the sales price and reduced my sales. Right? What if the variable cost per unit increase with $1, spending on the advertising increase with 1,500, and unit sales increase with 250? As you can see now, the different scenario here is chasing changes in different elements. So what we're changing here, first we're changing the cost structure or the cost volume structure. So the sales price stays the same, 20. Variable cost goes up with 1, become 13. Now my contribution margin dropped down to 7. Contribution margin percentage also changed to 35. Now what I'm selling is, instead of 1,000 units, I'm selling 1,250 units, 1,250 units. So if I change my units, what's going to happen here is I have to change this cell, which in this case will be cell 32. And that will be again 32. So my contribution margin jumped to 8,750, but I'm increasing my advertising. So I'm increasing my fixed cost with 1,500. So my new fixed cost is 7,500. So what's happened with operating income? Become 1,250. I'm here at 2,000. Now I'm down to 1,250. Is that profitable for me? No. That increase of 250 units is not enough to cover the increase in the fixed cost and increase in the variable cost. So we're going to strongly suggest to the manager not to do it. Good idea, but don't do it. It's not going to give you the profit that you want. Then we're going to the point that we're asking for the break even. Now the break even, I'm going to split it by two because those two are related. Once I have the original information, the break even, it's very easy to be calculated. That's why if you see questions like this, the only thing that I'm going to suggest you again, over and over again, get the basic information, get the something which is stable. Which is stable? Variable cost per unit, fixed cost in total. Those are stable. So in this case, if we have to get the break even in number of units, it's gonna be, what do we need? We need contribution margin per unit. So I know the fixed cost divided by contribution margin per unit. It's gonna give me the number of units that I need to sell to be on break even. And once I know that my fixed cost is $6,000, my contribution margin per unit is $8, I can easily calculate that the number of units that I need to produce are 6 divided by 8. And we're done. 750 units. Or break even in total sales will be pretty much the same, but instead of contribution margin per unit, I'm going to use the contribution margin percentage. Contribution margin, but now percentage, which will be equal to, again, 6,000 divided by 40% in this case. And that will be equal to 6,000 divided by 40%, or 15,000. If I generate 15,000 sales, 40% of those 15,000 will be exactly 6,000, which will cover my fixed cost, and I'll be on break even. Now, how many units we need to sell to achieve target profit of 5,000? What we're gonna do? Since we're chasing the target profit, we're not chasing number of units, or actually we're chasing number of units. Well, simply what we're gonna do, we're gonna still using this formula, but now what I'm gonna do is for the target income, I'm gonna add to the fixed cost the profit that I want to achieve, which in this case is $5,000. And once I add this profit to my fixed cost, that means I have to cover the fixed cost plus to generate extra $5,000. Once I do that, I will achieve the break-even. Doesn't cooperate something somehow today. Let's see. No, it doesn't change it. Anyway, so what we have to do here, again, on our formula, I have to add 6,000 plus additional 5,000 divided by 8. So my new break-even to achieve, no, sorry, no, not break-even, but the number of units that I need to sell in order to achieve income of 5,000 has to be 6,000 plus the 5,000 divided by 8 contribution margin per unit. I'm gonna close the bracket here, give me the calculation, and I need to sell 1,375 units. Once I can sell 375 units, then I'm okay. We can do the same thing for the total sales. For the total sales, we're going to use this formula and we're just going to add the additional uh, income that we want to achieve. Let's say we want to achieve here $10,000. So in our formula here, I'm just going to keep adding, and it's 6,000 plus 10,000 divided by 400. And by 40%, that's going to give me that 6,000 plus the 10,000 that I want to achieve, bracket divided by 40% contribution margin ratio, and that's going to give me that my total sales in order to achieve 10,000 has to be 40,000. 40,000, 40% is going to give me what, 16,000. 16,000 going to cover 6, and I'm going to have 10 left. Now, what's the margin of safety in dollars? Now, margin safety in dollars is simply where we are compared to the break-even. We already know at this point we're selling 1,000 units. Oops. Let's, we need a few more lines here to insert. Not that one, the opposite one, which is insert. And let's get the break-even here because I need that break-even. Once I know the break-even, and once I know where right now we're selling 1,000 units. At break-even point, we're selling 750. So the margin of safety in dollars and margin of safety in percentage. So for the margin of safety, for the break-even total sales are 15,000. Current sales are 20,000. So my margin of safety in total sales or in dollars is gonna be simple 20,000 minus 15,000. Where am I compared to the break-even? As a percentage, gonna be 5,000 divided by where am I 20%? It's gonna be 25%. So I'm at 25% above the break-even. So if my sales drop with 10%, I'm okay. I still have another 15% to drop. What's the degree of operating leverage? Degree of operating leverage tells you simply how many times your contribution margin move to the operating income. So where we are in this point, we're going to see that our contribution margin flows 4 times in the operating income. So our degree of operating leverage simply will be equal to contribution margin divided by operating income. And in our case, it's going to be $8,000 divided by $2,000. So how many times the contribution margin moves to the operating income? That will be 4 times. How this going to help us? That's going to help us to predict if the sales increase with certain percentage, what's going to happen. So in this case, if the sales increase with 5%, what will be the increase in operating income? Well, using the operating leverage, degree of operating leverage, once we're using that one and that one only, since I know that my degree of operating leverage is 4, if my sales increase with 5%, operating income is going to increase with 4 times 5, or with 20%. That's what's going to happen. So, what will be the justification of that? We can easily, simply get this information and see if this actually is going to happen. But I believe I have to add more lines here. Let's add a few more lines and see what's going to happen now. So if I increase my sales with 5%, that's what we're chasing, increasing sales with 5%. So the 5% increase, let's go with the 5% here. That will be equal to this one times 1 plus 5%. My sales going to become $21,000. Variable cost also is going to jump with 5%. It's going to be equal to this one times bracket 1 plus 5%. So as you can see, my operating income jumped with 400. Increase in operating income is this one divided by, minus the starting point. What is the increase? Increase with 400 divided by 440. Not that one. 400 divided by original income, which is this one. It's 20% increase. And that's your justification. How the 5% increase, which is $1,000, transfer to 20% increase in operating income. And the rest too is just additional questions if you want to do it. That's with basically that covers all the possible scenario and all the possible questions that you may see for the break-even analysis. Now let's see another one on the job costing. On the job costing, what you're gonna see is, let me see what kind of questions you have on the job costing. On the job costing, you have 2 questions. First question, we're gonna ask you series of questions about to determine what's the predetermined manufacturing overhead. Based on the information given, what's the predetermined manufacturing overhead rate for the year? Then you have to calculate, is it apply or under apply or over apply, what exactly is. So you have to compare the actual cost with the cost that has been applied. So you're going to compare actual with the versus applied. Once you do that, it's going to ask you again to prepare the cost of good manufacture statement. So you have to do the good manufacture statement twice. So again, what you're going to start, we're going to start with the, in this case, you may start with the beginning working process inventory, and then you're going to add direct material, beginning balance, purchase, total, less ending balance, direct material used. Then you're going to have direct labor. Then you're going to have manufacturing overhead. Then you're going to come up with the manufacturing costs, which are added to production. Then you're going to have the total cost to account for, deduct the ending balance of the working process, and you're going to get the cost of good manufacture. Now again, cost of good manufacture schedule again, but this time you're going to start with the beginning balance of the working process. And then you're going to apply the same. Then you're going to move to beginning balance. That will come first. And then you're going to come up with all this calculation to calculate the direct material. You're going to add direct labor, manufacturing overhead. You're going to deduct the ending balance. You're going to get the cost of good manufactured. That's what you have to do. Next one will be to identify was the manufacturing overhead over applied or under applied. And what's the unadjusted cost of goods sold? How are you going to get the cost of goods sold once you have the cost of goods manufactured? Beginning balance plus the cost of goods manufactured minus ending balance, you're going to get the cost of goods sold, which is unadjusted. Then you have to adjust the cost of goods sold with the journal entry, which is depends. If it's over apply, you have to reduce the cost of goods sold. If it's under apply, you have to add more cost of goods sold. Adding will be on the debit side, the reduction will be on the credit side. You have the chart here. Think about it, see where it is, picture the thing on the T accounts, do what you have to do. Next question is gonna simply ask you, is gonna give you information on the T accounts form. On the T accounts, what you're gonna see is different information. For example, you're gonna have raw material account. You're gonna have all the three accounts: raw material, work in process, finished goods, and payroll payable. And they're gonna start asking you different questions. What's the direct material used? What's the indirect labor used? What's the manufacturing overhead applied? What's the ending balance of cost of goods of the finished goods? Something like that. Of course, you're going to have all the other information. What information you may have? You may have the beginning balance, and then you're going to purchases, and again, you're going to have the ending balance, which is 30. So then how much material you used? Obviously, 20 plus 500 minus 30, you're going to get the number 490. Out of those, indirect materials are 50. How much is the direct material? Well, obviously will be 490, which I use. Here will be equal to 490, which I use, minus the 50, which is indirect material. Direct material is 440. Direct labor. Well, my direct labor is, let's say, 600. My total payroll expenses are 840. How much is the indirect labor? Well, that will be very difficult, right? 840 minus the 600, which is direct labor, 240 is indirect material, labor in this case. For the total manufacturing overhead for the period, let's say total manufacturing overhead is 120. Let's say the here, total manufacturing overhead 120. You under applied 20. How much is manufacturer? No, let's go with the null number because we're getting too high here. Let's go with 1,000. 1,000 is the total actual manufacturing overhead. Your under apply manufacturing overhead is 50. Or let's go 150. How much is the manufacturing overhead which you applied? So if I'm under applying, obviously this number here should be less than 100, the 1,000 minus 150. So this one will be 1,000 minus 150, and that's going to be 850. 850 is going to come here. So let's say cost of goods manufactured are, that's 1,000, 1,800, 700, 700, 1,000. So 1,700 is cost of goods manufactured. How much is the ending balance? Well, that will be again, let's say the beginning balance here, let's put the beginning balance some number, which is 60. And then what I'm going to have, beginning balance plus direct material plus direct labor plus manufacturing overhead minus 1,700 is going to give me the ending balance for the working process. Now I'm going to move to the next one and maybe ask me for how much is the cost of goods sold. But beginning balance is going to be given. Let's say beginning balance 60, ending balance is 100. Now I know the cost of goods manufactured are 1,750. How much is my cost of goods sold? Right, that will be this one plus 1,000. That one minus this one is going to give me 1,660. So if my cost of goods sold 1,660 and I'm under applying 150, how much will be my adjusted cost of goods sold? Obviously the original, the one that you're applying in the first place, plus those 150 which you adding additional, right? And that's how you get it. In this case, let's move to this chart here a little bit more. Revenue, I don't know how much is the revenue, probably let's leave it $2,000 just to be realistic. And then we're gonna have cost of goods sold, which is equal to this amount. And then we're gonna have operating expenses at 180, and that's 160. Now this is after the adjustments. What's gonna happen? Revenue is still 80, cost of goods sold will be this amount plus my under apply over applied amount. In this case, it's just directly adjusted. We're adding those 150 to 1,600, and my fixed cost operating expenses still the same. So my operating income from 160 dropped down to $10. Or with 150, which was what manufacturing overhead under apply. Now it can be over applied, right? If it's over applied, then you have to deduct the cost of goods sold. But basically that will be information. Different pieces of this chart, the way you see it, this chart, different pieces of information will be missing, and you have to come up with that curve. What is the direct material use? What's the indirect labor? Or what's the indirect material, but direct material is given? But total material use is not given. Well, you can get it, right? Something. Or maybe manufacturing overhead is not given. This one is not given, but you have the ending balance. You know, when you have the ending balance, when you have the beginning balance, when you have direct material, direct labor, and cost of good manufacture, you can easily calculate manufacturing overhead. Once you calculate the manufacturing overhead, you can see it was it over applied or under applied. That will be that question, and And that moves us to the last part of questions, which is activity-based costing. With activity-based costing, if you remember, I believe you remember the exercise that we did in the class that I told you about the electricity. Well, pretty much the same thing that you have to do in the exam. Not for your life, not for our life, not that chart and how we're using our time on planet Earth, not that one, but the one that we're applying the cost based on the percentage. So what do I know here? I know that what are my activities, and I know that which activity, what percentage using from specific cost element. And what else I know? I know the total cost. And I know that total percentage of that cost based on the activity is going to give me 100%. So if I combine this plus this plus this plus this plus this, everything has to give me $500,000. So once I prepare this chart, my total cost has to be exactly the cost that I'm seeing on my initial information with the cost. Because again, I'm not changing the cost. I'm allocating the cost based on the activity. So you cannot change the cost. Total cost has to be the same. If it's not the same, you're making mistake. Usually, the easier way to check yourself is on the total of each of the costs. That will be the easiest way to check yourself. Let me see if I can get this one as a raw document and present it to you. Just give me a second to see if I can find this slide somewhere. Maybe it's gonna allow me to copy and paste as and if it's easily pasted on the as Excel sheet, then it will be super easy for me to transfer it. But no, it doesn't. It'll give me as a picture. It's not like Excel spreadsheet. Otherwise, it will be easy for me to transpond the whole information. Right now, I have to type everything. But you're getting the basic idea. So basically, let me see. So what will be that? Let's do only, I'm gonna do it only for one cost. So let's say here we have this, let me increase it a little bit. Let's say with the indirect factory wages, I have that cost element. And what else I have? The activity, which is activity customer order. And then I have the next activity is product design. And the next activity is order size. And the next activity is customer relation. And the last activity is other. And then we have total. Let's move those ones just to make it even. Okay, so I have it as a percentage, 25% here. I have 40% here, and I have 20% order size here. I have customer relation 10% here, and I have 5% here. If you want to check yourself, make sure that you're getting 100%. Or if you're getting the 100%, you're on the right track. So what do you know? I know that Once those are the percentages for every each of those activity. What else I know? That I know, already know that my total cost for the indirect factory wages, in fact, is $500,000. So by knowing that, the question is, how much of those 500,000 belong to the customer order, production design, order size, customer relationship, other, and how much is the total? Well, obviously, for that, I can easily do this. This one is going to be equal. If I know that this one is, let's move it from here. I don't like it here. Let's move it right here. And then I'm going to start applying this one, which I'm going to fix time the percentage. And once I apply all those dollar percentages to the dollar amount, I'm going to get the cost per single activity. Once I combine all the cost, that cost should be equal to 500,000. And you can see in the very end, you can put yourself a checkpoint. If you're doing this on Excel, that will be equal to this amount is minus this amount, or this amount should be equal to this amount. Sorry, this amount should be equal to this amount. If that's true, that means I'm okay. Or you can put the number as a dollar amount, as a simple difference minus this one. In that case, if you somewhere you don't apply the proper percentage, let's see, you transpond instead of 5, you transpond here 10%, boom, on the check side, it's going to show you, oops, you have a mistake. So what's happened now? I'm, my total here, sorry, my total is $25,000 more. Actually, it should be the opposite. This amount that you're applying minus the original cost. So you're applying $25,000 more. So now you start checking what's happening here. Why am I applying more? Until you find that here instead of 10% has to be 5%. Oops, now I'm check. And then you can do the same thing with the next and the next and the next and the next, and you're there. That will be the first, and then you copy C, and you're gonna go to the next one, which the next one is the factory equipment depreciation. And then you're gonna say same thing, but my cost here is 300,000. Now you have to change the formula here because we are locked on the previous one. So this calculation here has to go to the new cell, which is C22. And once you transpond it, it's going to give you the calculation. Now you have to change the percentage. Here is 20s, here is 0, here is 60, here is 0, and here is 20. And after that, what you're going to do is you're going to calculate the cost only. And at some point, you're going to come up with the calculation probably here. Now you have to be careful though, because you have to get it through line by line. So you're going to get the total cost. For the total cost, you can easily get it. But on this side, you have to get this one plus that one. And once you get the first one, you can easily go all the way to the end. Get the thing, and you can apply the check here as well. That means you're good. Highlight this in different color, and you already know what you're allocating. So now I have for the cost order, I have the cost. For the customer order, for the product design, I have the cost. Order size, I have the cost. Customer relationship, I have the cost. Other, I have the cost. Total matching my total. And keep going, keep going, keep going to get all the activities with all the percentage and getting the total cost. That's more like a transponding a calculation question rather than The only thing is be careful, don't make a mistake. Again, the total cost here has to be equal to the total cost at the end. That's your objective. That's what you have to. And the last question will be, once you have the total cost and once you have the total activity, can you calculate how much is the cost per activity? And when customer comes and they say, I want this activity plus this activity plus this activity, how much will be the cost for that specific order? That will be your last question for the activity-based costing, and that will be your midterm exam. Questions? Which one you want me to repeat? Sorry, Anshi. Okay. Do you understand? Probably you about this check. So technically you're checking if the cost which is sitting on this report, once you apply the percentages, the same cost is transferred to all those activities. That's what you do. Predetermined rate, you need the cost. You need the cost and how you're applying the cost. For the predetermined overhead rate here, you need the cost. Once you give it the number for the estimated cost, you see how much is the estimated activity. And then you can. No worries, Amanda. Careful when you're driving. Questions? Any other questions? The job cost again. Which part? Well, that's what we're talking about today. The other 9 questions. Those are the other 9 questions that you're gonna see. Which part of the job costing you want me to repeat? Because you have the recording for the job costing, you have the Excel spreadsheet for the job costing already posted for you, and you have assignment on the job costing. If you're asking me to repeat the job costing, which part you want me to repeat? No, the MCQs. No, I'm not discussing the MCQs. I'm gonna leave it to you. The job costing is very straightforward. There's nothing in the job costing. Literally nothing in the job costing. You just have to get the information which is related to the specific items that you have. You need the direct material, you need the indirect material, you need direct labor, you need the indirect labor, you need manufacturing overhead, which you're applying from the manufacturing overhead account. In the manufacturing overhead account, on the debit side, you're calculating how much is the actual cost. and on the credit side, you see how much is the applied. The difference gonna give you over apply, under apply manufacturing overhead, which you have to close in the cost of goods sold. There literally nothing on the job costing. The only thing is how you apply the manufacturing overhead. But on the manufacturing overhead, you're applying it through the predetermined manufacturing overhead rate. Now, the question may ask you if that's how much you applied, and that's how much the usage is, what's the predetermined manufacturing overhead rate? Which again, the question is going backward now. On the question, no, you don't have to do the accounts, but you have to do journal entries. And you have to know how to read from the T accounts. You're gonna see it. It's kind of interesting. I mean, I hope you enjoyed the exam. Any other questions, guys? Julia, I'm so sorry. There was they couldn't make it. I was hoping they're gonna make it, but they couldn't. Don't hate me now. Okay, guys. Thank you for today. Now this Excel spreadsheet, if you stay, I'm gonna show you. I'm gonna post it this Excel spreadsheet again. Now, is there anyone from the Wednesday class today? I know yesterday there was people from. Is there anyone from the Wednesday class, or you're all here from the for the Thursday class? Anyone here from the section on Wednesday? Okay, if there's nobody, it's okay. Let me share my screen and I'll show you where I'm gonna post this Excel spreadsheet, which was just created. And once the recording is available, I'm gonna upload the recording and you should be okay. So on the midterm practice questions, calculation for the midterm, and then will be a second document. I'm gonna edit this just to uh, to copy the name, and then I'm gonna add a new question here, which is document, and the document will be upload my downloads. That will be the midterm review from today. June, that will be June 18th today. And you have it available. You have both documents. One is from June 17th, the other one is from June 18th. Let me label this one June 17th, 2026. And I'm gonna post it to the other group as well, so they can have it too, just in case. Oops, it didn't upload it. Let's upload it again. Okay, now it's good. Okay, guys, you have everything available. Practice, do your assignment, and you'll be fine.
Thank you, Ivan.
Thank you.
Have a good night.
You too. Thank you.